What is good, guys? Today is day 26, maybe, of the boot camp. I don't exactly know. Now, with that said, this boot camp video, we're going to try and steer a little bit away from the technical side of trading and more towards the backgrounds, like the logisticals. Like, what do you need? You need a trading plan. So today is going to be about establishing that plan, that routine, that system, as although discretionary is king in these markets and is going to be how you're going to make the most, you should still have a rules on the back end of that system so that you can still have a probable win rate, and it's not all just how and pretty much your skills for that day. Now, I'm still gonna do this just so that I could type on the charts what I want to see. First of all, can we please show this banger ass trade I took this morning? Please. Like, this trade deserves some love. Baby. Give it some love. Look at this trade. And we immediately spiked up right after. Give it some love, boys. Give it love. Anyways. Now let's hop into the charts. Now, I want to be in the 1 minute time frame. No, 11's my lucky number. Having a plan. Now, this can go for a bunch of things. I'm going to get my notebook out just to show some of the things that I said, just so I can prove like this isn't bullshit. Now, first of all, what I want you to do with the notebook, I know you have it, you should have it when you're taking these. Go to the back, because towards the back, you want to set your rules so that you can easily flip to them and find them. So, I actually have these. So, trading rules. I wrote this on February 3rd, 2026. Almost 8 months ago. What do you want to risk? You want to risk 3% max in a trade. Now, I'm going to be honest, don't write the risk down. Because now that I can reflect on all these, I want to tell you which ones are bullshit and which ones actually helped. I wouldn't say write the risk down, as there's always going to be different scenarios for when you actually want to risk. For example, if you're profitable and you're on a funded evaluation, eval, you're going to want to full pour that bitch. Whether it's on a real trade, but you're going to want to risk the full capital that you can. Now, if you're on an actual funded account and you're on a payout, you're really close to the payout. Maybe you want to really de-risk 0.5%, 1%, $500. If you're on a live account, you're obviously not risking 1%. You have 100K in a live account, you're probably risking 2 to 5 G's. Maybe 10. That's why don't write the risk. The risk is a bullshit. As obviously, you shouldn't just be saying, oh, my notebook doesn't say, so I'm going to risk 50%. Like, no, you know how to trade. Trade according. You know. Now, there's one thing I will say with risk. There's never a minimum amount of risk you can have. For example, you can always do less, and less is fine. Yes, you might not make more, but it's always still safer. Obviously, you have to have balls at some point in scale, or you'll never make the money you want to make. But still. Now, this is a big rule I'm on. Do not risk what you are not willing to lose. Ask yourself, before every single trade you get into, I want you to ask yourself, if I lose this trade, and I lose this amount of money, risk, blah, 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 will I be happy with it? And if you ask yourself that before every trade and you actually, according to it, you listen to it, you will 10 times your profit. When I started doing this like a month ago, 10x my profit. Why? Because all the dumb setups that you used to just take, you were only thinking about the green side. But now before you enter a trade, if you think about the bad side too, you'll say, well, is this trade really a part of my system where if I lose, it is a statistic? Or is this trade like a FOMO where if I lose, it's just going to set me back another trade? And asking yourself those questions is just going to help you. Is there the LRL? Am I targeting higher L? All that. Now, always calculate your risk before entering a trade. There's a couple scenarios for this. So one thing I like to do when I got tired of calculating my risk is I would kind of just enter with 1 mini. And here's the problem with that. In June, when I started the 1 mini thing, price was fucking crazy. Not choppy, but each candle was moving around 100 points, 80 points, 100 points. And for those of you who don't know, I believe 1 point on NASDAQ is $20. So when it was 100 points, I would end up doing a mini, and thankfully I would win the trades, because if I lost, I would blow the account. I wouldn't even realize, but I'd enter a trade with a mini, set my risk, I'd be in a trade, and then I'd realize I was risking the whole account in an accident. That was a mistake on my part. That's why I say always calculate your risk. Now, I will show you in another video how to calculate your risk, but a quick tutorial is this. Say you want to enter this long, draw your stop loss out however you want, right? Say you want your stop loss to be like this, TP like that, click this, and you can just adjust the positions, and as you see, the risk is moving right here. Now, another way to do it, I don't do it, but I gotta tap into it. There's like a setting where you could make it so that like you risk, like, see this, a certain amount of money each trade. So that obviously helps. That's one way. Now, if you're on like Top Step or something where you don't have this tool to just manage your risk, you're gonna have to search up just calculator, like it's been a while. Futures position size calculator by Metro Trade. It's gonna be this. So what you do, you go to, let's say you're trading MNQ. You have 50K in the account. This part doesn't matter. You can put however much in, pretty much, unless you want to actually risk. And say you want to risk $500, you type in $500, and say your stop loss is 25 points. You calculate it, and it tells you enter with 10 micros, so 1 mini, to risk exactly 500. That's how you would calculate on something like that, okay? Now, trades. For me, what I like is I change this. At first, I wrote 2 trades max in a day, but now it's 3. Why is it 3? Well, first, if I get 1 win, I'm done for the day. I personally think it's bullshit. The people who say, keep trading, blah, 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 blah. No. This thing, once you are actually good at it, if you put time, you like trading, but trading's not fucking fun. Once you are a good trader, you literally just sit there watching price dilly-dally, waiting for your levels to get hit before your entry. And some days you have to watch this for 3 hours with no entry. Like, that's how the market's recently been. So for me, I know some people can. One, I cannot find that many quality setups in a day that I'm really confident in what to risk and put my capital on. 2, I don't want to be a fucking gooner staring at the charts all day, just fucking saying, buy, sell, blah, blah, blah. Like, no. Give me my bread and let me get the fuck off. Reset my psych and enjoy my life. That is why I worked so hard for this shit, to enjoy my life. And that should be the purpose with you too. Enjoy your life. Does that mean, like, obviously you could do more, but anyways, for me, 1 win, I'm done. First win, I'm done. 1 win, 1 loss, I'm done. Break even, I could take another if I want. Usually I like to be done though. So, I used to do 1 trade no matter what done. Now, the reason I allow myself to take a second trade of a loss is, look, what if, so price just tapped in this 4-hour gap, right? Tapped my key level. We swept some liquidity like right here, right? We get my long entry. I go long. My stop loss is at the swing low. My TP is right here, right? 1 to 1. Now, what if price comes, re-stops me out, but now we re-swept this. We have LRL generated. This right here is now HRL. We're not going to try and run this anymore. Our stop loss is even more protected. It's like, why should I watch that trade play out instead of now I just have a re-entry maybe right here for better RR and a better and more protected stop loss, where now my trade might go like this. Bang, TP, you know? That's why I allow myself to now do more than 1 a day. But I do recommend just doing 1 trade a day if you're new. Reason being, you're not going to have the control. You're not going to be able to say, okay, I just lost. Now, the only way I enter is if I see another textbook setup. No, your mind's going to immediately start saying, I need to make this money back. And you're going to find a trade. You're going to FOMO into it. I used to do this too. That's why I'm telling you. You're not going to find the A+ setup again, most likely. You're just going to find another trade that you know you usually wouldn't take, but it's going to, fuck it, it'll probably play out, right? No, it won't. It's where you're going to give back all your money to the market. Now, let's see. Yeah, dormant trade. Sessions. So when I first start and when you first start, I recommend only trade one session. Trade New York session. Just try to learn it. Don't trade pre-market. Try to trade New York and master that session. I will say that is what I said and what I was told at the beginning, and I do recommend that for you. However, as a day trader, you do have to adapt to the market. And I will say right now, Asia session is by far the best with how unreliable and choppy NY has been. And as a trader, I don't even have Asia mastered. I have NY mastered. So now I have to get Asia in my arsenal. Even though I'm 8 months in this shit, I back test and forward test every night. And that's just what you're going to have to do, adapt. Now, daily loss limit, you could either say 2 trades, 3%, blah, 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 blah. Just have a rule in place that you never want to risk too much. For example, if you're on an actual funded account, not an eval, and you're profitable, you do not want to blow like half of the account or more in your first day getting it, which would be 2 losses. So maybe approach that differently. Okay, I just took my first trade, lost $500. Maybe you take the second trade and you try and go for a 1 to 1.5 RR where you only risk $300, but then you can make back what you lost. Something like that. Now, this is for me. Stop loss and TP. There is no moving my stop loss back. You can move it forward, not back. For example, say I'm in this long. If price was coming, going pretty well, going well, and we start coming here, I'm not going to allow myself to do this. That is gambling. That is how you blow accounts. Instead, you keep your shit firm, you trust your stop loss, and you hope that this little gap, your little stop loss is going to hold, and then it goes back up. I've had that happen. That happened today, happened the other day, to the tick. But, the same thing, TP you can move, but you shouldn't try to. Reason being, like, you can move it. It's just like, you know, like, you can take partials and shit. Just, if you're in the long, you shouldn't try and move your TP to here because we might reject. Obviously, there's situations, though, where I've even had it. If price is really wicking around your TP, just close. Take the loss of that extra $100. Because I've seen so many times, even through my journaling when it's happened with me, where I won't close, and then it goes all the way back down the break even, and there's no worse feeling than knowing you had that unrealized $1,000 P&L, and then it came all the way back down. That sucks. Now, let your runners run and cut your losers short. For me, if I'm in a long or short, and the main thing in my stop loss is like a fair value gap, if that shit gets inversed, I'm closing the trade manually. I'm cutting that trade short. Dodgy does it. All of them do it. Because think, you're saving more capital now. So why not? Now, post-trade must-dos. I haven't done this in a while. I'm going to be honest. It is a little bit pointless, but journaling. As journaling can help, so I'm going to start it, but you really have to have a defined system for it to help. Now, the best rule I can say is trade to execute, not to make money, as we are paid to wait, not to trade. That's just a bar to keep in the back of your mind. Do I have any other rules? I would also say in your trading plan, just have questions to ask yourself. For example, if you are going to a trade, maybe I would check this. I don't, but maybe say this. Okay, did a major session of liquidity get swept? Is the fair value gap getting inversed? Is volatility good? Is price clean? Is my DOL strong? Is my stop loss protected? Just ask yourself all those questions so that you don't find yourself in the trade, and then maybe you check a higher time frame. You're like, fuck, why am I in this? There's like a 30-minute going against it. Because I can tell you that's happened so many times to me, and there's no worse feeling. You're in a long, and you realize your gap's protected. You're like, fuck. Anyways, with that said, that was today's bootcamp video, which was going to be on having a trading plan. I hope you guys enjoyed this one. Comment whatever you're thinking with how the bootcamp's been. With that said, I'm going to end this here. Peace.